Hey everyone, welcome back to Corporate Decoder. Ever wonder what happens when a fund manager gets lost in a small cap value maze? Today we're cracking open the annual shareholder report for Columbia Small Cap Value Fund, ISLAC Financial Hide and Seek. And trust me, some companies are harder to find than others. Before we jump in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Let's get started. Columbia Small Cap Value Fund I is a financial product for investors and focuses on investing in small companies that they believe are valued less than they should be. This report basically tells shareholders how well their money was used in the last year, what worked, what didn't, and what the future might hold, but we will try to go behind the PR and dig into more useful insights. First off, let's talk about costs. Like any investment, there are fees involved, so the main reason we want to get into financials is to see the value of paying those fees. For a Class A share, it costs around $120 for every $10,000 invested. This can also be seen as 1.21% of your investment. It's important to keep an eye on because these costs eat into your returns. Now, how did the fund actually perform? It appears it did well by choosing tech, finance, and utility companies, but struggled with picks in consumer discretionary, consumer staples, and real estate. It's like a mixed bag where some bets paid off and others didn't. Let's get to the real numbers. In the past year, Class A shares before sales charges or additional commissions actually lost 1.02%. Ouch, not a great year. That's the return before taking into account fees. If you include those fees, you lost 6.72%. However, let's zoom out. Over the last 5 years, things look better with a 15.01% average annual return before fees and 13.66% with them. But over 10 years, it has about 7.31% a year. There's a table with market indexes to check the fund performance. The relevant one for the fund is the Russell 2000 Value Index, which tracks smaller companies, so they claim their performance can be fairly evaluated. For comparison, in a 10-year basis, the Russell 2000 Value Index is performing near 5.87% a year. So in that regard, they do provide higher than expected return. And there's more. Something changed mid-year. Effective August 1, 2024, the benchmarks changed because of regulations, but they still believe their main focus is the Russell 2000 value. One thing we should keep in mind before moving forward is that these past results are not a guarantee of future performance. All right, fun stat time. The total value of the fund is over $1.4 billion. This is how much money they are managing. They have investment is 216 different companies, so diversification is definitely a goal here. The management service fees themselves are about $20 million. It is also relevant that 72% of the portfolio changed this past year. What this suggests is that the investment found a lot of new investments to make during this past year. What are the top investments? Looking at their biggest bets, National Fuel Gas Co. is at the top. At only 1.6% of their assets, it really puts into perspective how diversified this investment is. As for which areas this fund invests in the most, their focus is in financials 2-4% should, industry 16, and healthcare 10%. Let's briefly poke into Class C shares. A similar investment in Class C shares cost $194, around 1.96% instead of 1.21% that was in the Class A sharing. However, the Class C doesn't perform nearly as well, being negative 1.76% and negative 2.63%, accounting for fees. So it seems Class A far outperformed Class C. The assets and equity allocation is roughly the same, so nothing relevant or of interest here from the outside. Now looking at the institutional class, it's even better. It only costs $96 in fees or 0.96%. The return is also superior, posting negative 0.77% on a year basis. These results confirm that as you climb the ladder of share classes, the better the terms are for yearly returns and general return. So it really pays to get the best share class you can get. And that's about it for the financial statements for Columbia Small Cap Value Fund I. It's important to understand this to see where your money is going and what it can do. Now, looking at these results more broadly, the fund had a tough year, but they're not alone. A lot of investments struggled due to market uncertainty. The key strength here is their diversification. They're not putting all their eggs in one basket. However, this widespread might also be a weakness, as it means they won't see explosive gains from any single company. One of the longer term risks I see is that the shift in focus might mean they're chasing short term trends instead of sticking to their value investing roots. As for my conclusion, is it a good investment for the past year? Not really, but it showed decent results overall. Given the data above, it has some risks and there may be better performers for a low risk style of play. That's our deep dive into Columbia Small Cap Value Fund I. What do you think about the findings? Drop your thoughts in the comments, like this video if you found it helpful, and subscribe for more detailed analysis. Also, if you are interested in learning more about making real life investments, join the Discord down below. Thanks for watching. See you next time.